Hi guys, welcome to Traders Talk, and this is Ming Hon, your host and your one and only host for this show. Yeah, all right. For those who have hopped on, give me a thumbs up if you can hear me, and we'll go in deep today into another trade digest. Yeah, so I've heard that. The viewers like to go through trade digest, and of course what is this trade digest is that we will actually go through for education purposes some potential trades which we are eyeing on under our watch list, and of course if the price is right, then of course we will actually make an entry into this trade. Into these trades. Yeah, and of course, within this traders talk, we will explain what this trade is, and of course, also why we are actually entering into this trade. Yeah, but before we go into the trade digest, of course, we will actually also go through. The markets which we basically look at is actually the S&P 500, which basically give us a gauge where the market is headed, for the last week, and basically what do we actually expect to come in the current week itself. Of course, today is actually the second day of the trading week, and the reason we choose to have the show on the second day is because the first day we are actually busy to issue our newsletter. Yeah, we're also busy issuing our newsletter, and of course the newsletter will actually cover also in advance, basically what do you actually expect to come in on Monday. It's not that we are actually not we are actually skipping a trading day, right? So in order to actually see our views of the whole week, which starts from Monday, yeah, then of course you guys need to actually look at our options trading newsletter. It's actually absolutely free, and of course if you do not know where to actually get it, right, you can actually get it off that website which I've just posted there. Yeah. Okay, all right. So we have issued 102 issues to date, 102 issues to date, coming close to 2 years actually. Yeah, I think next month itself we are actually 2 years into issuing our newsletter. Yeah, and of course, for the past 2 years, we have actually covered a lot of contents. In fact, if you have actually read up all our newsletter, you would probably become an expert in trading and trading of options. Obviously, yeah. Hopefully, you have been diligently reading our newsletter. Yeah. All right. So let's head up to the market. Okay. So the start of the week is not too bad. Not too bad. Because yesterday market was actually up, right? Yesterday the market was up, and of course most of the stocks were actually green, which I will just show you in a second. All right, let me make myself smaller. You don't need to see me, right? Okay. All right. So actually, if you look at the market, what has actually happened is that yesterday itself, the most of the stocks were actually green. If you can actually look at this heat map is actually from finviz.com. You can actually go to finviz.com to actually look at the heat map for S&P 500. Yeah, and of course, the bigger the box means that it is actually contributing a big part to the S&P 500 component. Yeah, and of course, if you can see, the biggest here is actually this Apple and Microsoft, Google, Amazon, Tesla is also quite quite big. Yeah, and of course, Tesla yesterday itself had a huge bullish run of 5.46%. Yeah, I think well above $10 just for the day. Yeah. Yeah. And of course, this was only yesterday. If you actually look at the market last week, right, the scenario is actually totally different. Yeah, if you can recall, or you have actually seen our trading show last week, right? The scenario was actually totally different. And of course, you can also move to the 1 week performance, right? If you look at the 1 week performance, actually all or most of the stocks were actually red. Yeah, were actually red. except here for some energy stocks here. The rest are basically all red. And of course, if you look at the 1 month performance, which basically today is the last trading day of the month, right? So the past 1 month performance has not been that great also, because after the rally we had in January, right? The very nice rally up, right? More than, I think it's more than 10% up, right? Then of course we had actually in February a full month of retracement, If you actually look at S&P 500 here, right, you can actually see that in January, this is January somewhere here, right? Yep. In January itself, we actually went up about 11%. And then in February itself, right? In February itself, we had actually came down from the high, right? We have actually came down about 6%. Yeah, 6%. Yep. So 1 month up, 1 month down, and of course this is quite normal for the market. Yeah, because the market, even if it's actually going up, right, it doesn't go up in a straight line. Yeah, but of course certain key things has actually happened in January itself. Whereby we have actually broken some key resistance level to give some hope for us that the bear market will actually stop, right? That the bear market will actually stop. Yeah. If you look here, then of course this trend line, this green trend line, is actually one very important trend line which we had monitored for the past 1 year. Let me just pick the thing. Yeah. So of course this trend line has actually been broken somewhere in 23rd of Jan. We have actually broken up this trend line. Then of course we had continued the rally all the way up to about 11% up in the S&P 500. Of course, for Nasdaq, the increase is actually much more, but S&P had a rally of almost 11%. Then, of course, we had actually, started the retracement first day of February, first week of February itself. Then we actually started to move up and down here, and then of course we had started to actually come down since last week. The support levels, right? The support levels here, 4,100, which we actually mentioned earlier, was broken. I think it was somewhere last Monday, right? Monday it has actually broken down. Yeah, mainly because a lot of economic data which has actually came out in February, right? All those economic data was actually not helping the market. Mainly things like GDP was actually higher than expected, and of course, GDP higher than expected, a good GDP growth is actually good for the country, right? But of course, during this time, the Federal Reserve is actually trying to sizzle down the economy, right? They want the economy to suffer, to go into pain, and when the economy don't go into pain and don't suffer, then that means their policies in tightening the market via interest rate hikes and all this are actually not working. Inflation is also not coming down. Yeah. So those positive news on the economy, on the economic side, high inflation, sticky inflation, the manufacturing index, price index, and all are actually still high, right? Then of course, these data had actually spooked the market a bit, and of course that had actually brought down the S&P for practically the whole of February. Yeah, because I think the rate hike was actually early February, right? I think it was early February. Then after that, the hope was actually for the Fed to finish off their rate hikes in the March and May meetings, and then after that stop the rate hike, and hopefully towards the last quarter or year end, we would actually hope to see that the rates actually start to come down, which is they are going to actually cut the rates in this year. But of course, with this data coming out right now, the hope was actually gone. Yeah, the hope was actually gone. Then of course it starts to talk about whether in the next meeting in March, right, the next Fed rate hike in March, whether they should actually raise the rates by 50 basis points instead of 25 basis point, because of the new data which they have actually not considered when they had the meeting earlier meeting. Yep. So when they do the next meeting to decide on this, then of course the next important data for them would actually come in, which is the February February CPI, which would actually come in. I think it should come in somewhere in mid-March. Let's check. Okay, let's check the economic timetable. We go back to Finviz, not Finviz, Forex Factory, to actually see the economic timetable, and we are actually looking for CPI, right? I think this Friday is this Friday we should have what's that? Employment, right? This Friday, Thursday, Friday. No, labor, FOMC meeting Thursday. Unemployment claims comes in this week Thursday. And then what else? We have the manufacturing PMI on Wednesday. And then consumer confidence is actually today. Yeah. So this again, some form of economic indication that will how to say, not interfere, that will mess up with the market direction a bit, yeah, to confuse it a bit whether they want to actually go up or go down. Yeah. Okay. Then I think it is somewhere should be in the middle. Employment claim average non-farm change 14. Yeah, 14 of March. Yeah, 14 of March CPI data will actually come in, and then I think 22nd of March is the Fed meeting. 22nd of March. Wow, that's far. 22nd of March here. Yep. 22nd of March, which is actually 2 a.m. on 2 a.m. on 23rd. Basically, it's 22nd of March, trading day, Wednesday. Yeah. So this is the so-called things that will actually happen. We have still about 1 more month towards that date, and of course, before that, then all these smaller economic news would actually come out to, like I said, mess around with the market. Okay, so coming back to this thing, so where are we right now? We are actually below 4,000. Yeah, we are actually below 4,000, and of course the round figures are always how to say, psychological levels, right? And of course, once we actually breach the 4,000 psychological level, then it is actually not that positive for the market. Okay. Yep. And of course, even we had a rally yesterday, right? I think S&P actually went up more than 50 points yesterday before it actually lost it all before closing. And I think at the end it only was plus 12 points. If you see this, make it bigger for you. Yeah, make it bigger for you, because the screen is so small. Let me put back my levels. Okay, let's see. Okay, so here, we were. This is yesterday, right? Yeah, you can see that there is a long tail, right? Long tail bearish candle, which actually formed, even though it was actually a plus yesterday, because when it opened, it actually gap. I think it gapped up, right? It gapped up on opening, and then of course after the day it actually came down. It was a bit choppy. I think during the day it came down, then it went up, and then it came down towards close. It's quite normal, I think, for the past few few weeks, you can see that all the candles which actually form, right, have very long and thin wicks. Have very long and thin wicks. Let me show you. Okay, you can see many of them. You see this day is like this day is the other way around. This is in the middle. Yeah, this is actually long tail going up, this long tail coming down, in the middle, long tail up, long tail down. Yeah, so basically it is actually quite a choppy market if you are actually looking at the market on intraday basis. Of course, if you just look at it on opening and closing, then it may not sound how to say, it may not sound big changes during the day, but of course within the day itself, we can actually see 1 to 2% intraday movements up and down. Yeah. Okay, so because of this, also some of the strategies which we actually employ, because of the choppy situation, right? The strategy, if you are actually keeping trades longer than expected, right, then of course the trade position can actually turn very fast. Yeah. So we during these volatile times, we tend to actually take on a bit more neutral strategies. Neutral strategies are strategies which are basically how to say, indifferent, not so, as long as it moves within a band, right? As long as it moves within the band, we are okay. If they go down one day, go up the next day, we are okay. But as long as it actually moves within a band. Yeah. As you can see, the S&P was also moving around certain bands, right? During this time, right? You can see that during these 2 weeks, right, it was actually moving around this band, right? This band, and of course, it broke below this last week. It broke below this band last week, and of course, once it broke below, it continued to actually come down and found some form of support at this 3950 level. Yeah, 3950 level, which actually corresponds to this level here. Correspond to this level here. Yeah, this low here. Yeah, so it actually came here close to the 200 daily moving average. It did not touch, but close to it. Then it actually bounced up. Yeah, and of course, if you look at other indicators, right? If you look at other indicators, there is also some form of support at this level, which if you actually look at the Fibonacci tool, right, this level is somewhere from the this level here, the one which we closed yesterday, right, was actually sitting at the 50% Fibonacci level. Okay, and on Friday, it almost touched the 61.8% Fibonacci level. It almost touched it. If we actually take it from the lows of the previous low, which is basically on 22nd of December. Yeah. Okay, and there are also other so-called trend lines which we are also monitoring, right? The other one, which was also breached last week. Yeah, this other trend line, we were also monitoring this trend line here. Yeah, which was again breached. That's why when it happened on this day, right, you can actually see a very bearish candle, full bar. Yeah, full bar bearish whole day practically. It just came all the way down, right? Okay. Towards close also is quite bad. Yeah. So once it broken this trend line here, right, it is actually it has continued to actually come down until yesterday itself. We had actually turned green. Yeah. Although the buy is red, right? Actually, yesterday the market was actually slightly up by 12 points. Yeah. So what do we expect What do we expect this week? Of course, this is the level for you to actually watch, right? 3950, yeah, 3950. And of course, I would say there would be a bit more how to say many levels of support if it actually comes down. So of course, it is not, how to say, it's not for you to actually worry so much, because it's like if you fall, right, you can actually fall to a roof on top, and if you don't die, if you don't die, there's another roof below for you to actually fall again, so that to protect you. Yeah. So of course, one level is of course the 200 moving average. We is still one level of strong protection, which is slightly just below this 3950 line, right? And of course, the other one is actually again this green long-term line, right? Yeah. Although before that it was actually a resistance line, then of course it actually comes down here. Then this can also be one of the support lines for the S&P 500. Yeah. Okay. I would say until things until the economic data actually proves otherwise, right? I think the market would likely to be choppy, and the next biggest data coming in is only in 14th of March. Yeah. Okay, so this is S&P 500. NDX, I mean, basically, it would actually also be similar in a similar situation, right? Yeah, in a similar situation. Last Friday itself, it bounced off the 200 daily moving average. This is daily, right? Yep, daily. 200 daily. Let me put this. Yeah, it bounced off 200 nicely. And then, of course, yesterday itself, the Nasdaq had plus 88 points. Plus 88 points. Initially higher, but of course, gave up some during the day. Yeah. Levels, of course, level of support is this level here, somewhere at this level here, which is at 11,900. Yeah, 11,900. Where are we now? We are at 12057. So 11,900. And then the next level down, of course, you're looking at 11,000, somewhere around 11,600. Yeah. So this is actually a band down. And of course, if it actually goes up, then there this level, I would say this level first, somewhere this level 12,600, 12,600 level first. Yeah, if it goes up, but I don't think it will actually go up so fast. Yeah, so fast. It will probably be still a bit choppy, moving sideways for a while until it finds reasons for it to actually move one way or the other. Yeah. Okay. So if you have any questions, just pop on to the chat. If I can answer them. I will also answer them during the show here. Okay. All right. So okay. So that's the market. That's the market. As I said, a bit still a bit choppy. So watch your positions. If you actually do neutral trades, I think it should work out fine. Because we have also placed some neutral trades on SPY, right? We had actually placed some neutral trades like Iron Condor on SPY last week itself, and of course the even though with the volatility, it goes down, it comes up, right? Those trades are currently performing quite well. Yeah, as long as they don't how to say have a huge spike movement, a big spike movement. Of course, like I said, without a big so-called thing to push them, right? Like economic data or the rate hikes kind of things. Then of course, the momentum for the SPY to actually have a big surge is actually less likely. Yeah, unlike if you talk about stocks. Yeah, unless you talk about stocks. And of course, the movement of stocks nowadays, right, is actually how to say, quite unpredictable. Like for example, the other day, what happened is on Adobe, right? And on Adobe, suddenly you see that the position actually gap down. I think this definitely by more than 47 to a $20. It actually suddenly gap down by $20 last Friday. Yeah. And then other stocks, some of the stocks are holding quite well. Microsoft, I mean, have a huge sell down, right? Had a huge sell down of more than $26, right, from the highs, yeah, from the highs. Still not recovered. I don't think it will actually recover so fast, yeah, because this rally up was actually quite big, about $50 up, you see. So now it is only losing back about 26, half of it, yeah. And of course, if you look at uh, the levels, right, where is it right now? If you just look at the Fibonacci 2, it's actually just bounced off exactly at the 50% Fibonacci level. Yeah, 50% Fibonacci level. Okay. Microsoft, then what else? Apple has actually been, I would say, holding quite well. Apple. Where's Apple? Yeah. Apple. AAPL, Apple. Okay, Apple has been holding on quite well. You see that although from here to here it had actually a huge rally, right? The drop, I don't think they have actually lost 50% like Microsoft, right? They have basically lost maybe about here, maybe about 20% of this rally. They have lost 20% of this rally, and basically they are kind of like hovering around the 200 daily moving average. I think for Apple, it may be possible to actually look at an iron condor if you actually want to actually enter into one. Yeah, just make sure that on the upper side of the short call, right? Short call of the bear call spread on the iron condor is actually at this level, and of course on the lower level, probably if you can actually get somewhere around 140 or below 140, like I would say 140, 139 to 140, just along this what is that, what line is this is 50 moving average, right? Just along this line, I think it should be okay. Yeah. Okay, and then China stocks, don't talk about it lah. Yeah, China stocks is quite bad for this past, how long? Past month, right? Whole of February basically. After they have made their money to fund their ang pao, right? The Chinese New Year, right? After they have made their money to fund the ang pao, then of course they had a huge sell off after that. And then bank stocks, I think bank stocks is also holding quite well. Yeah, in fact, we actually wanted to take in some positions on Goldman Sachs, but we actually missed it last week lah. Yeah, missed it last week. Yeah, you see it coming off to the 50 moving average, right? This is daily, right? Yeah, daily. This is 50. Yeah, this is the 50 moving average. Yeah, so it's hitting 50 moving average, then it bounced back up. Okay, what else? Yeah, I think those are some of the key stocks lah. I mean, the others, yeah, if you did our SOM trade, right, the one which we actually did on the last round, I think early first week of February, right, if you did the Jet Lizard trade on XOM, then of course that trade actually went quite well. We are slightly above 50% profit target right now. I think as at yesterday is probably at about 60% profit target. Yeah, the trade max profit is about $100, right? So basically we are in profit about $60 right now. Yeah, so that trade was actually to subsidize some of our petrol, right? We were talking about petrol early of the month, right? That trade was actually to subsidize, and of course, it worked out well to do its job, lah. And of course, today itself, we actually also want to do another trade in the oil sector, using XOM, yeah, using XOM. And of course, you know that oil price has actually came down quite a lot, right? The crude oil price, right? I think it has actually came down, I think, all the way from $100 over, right? I think the high was somewhere here, right? $120 over, right? It has actually came down quite a lot to now about only about 70 over dollars. Yeah. So of course, because of this, also some of the oil and gas companies, uh, I, I I mean they have not really stop their, how to say, uptrend. I mean, it has slowed down a bit, yeah, because the profits they have actually made when the oil price is high, and when the demand was high during after COVID and all, right. I mean, practically during those times, they have actually made a few years profits during those I think 1.5 or 2 years. Yeah. So plenty of money for them to actually grow their business, or put in as reserve, right? You see that the trend is actually still very strong uptrend for now. Yeah, strong uptrend for now. The 50 moving average is still above the 100. Yeah, although it's coming close, but it's still above. Yeah, and of course, yesterday itself, Oxy made their announcement, right? Oxy made their announcement yesterday, and let's see what. Yeah, the pre-market 58.62, basically not too bad. Not too bad results, right? Reported 1.6. I think this should be 1.6 billion, right? Estimate 1.8. No, sorry, this is earnings. Revenue 8.2 billion. Estimate 8.3. Yeah. So they're missing earnings about 10%, and of course, the revenue is also slightly down. Yeah, and of course that could be attributable also to the uh, sharp decline of the oil prices for the past few months. So the other thing which irks me, right? Yeah, because this why I wanted to do this continue to do trade on petrol companies, right? Is that this morning I went to actually pump petrol. Okay, I went to actually pump petrol, and when I was at the pump, right, normally I will pump at this for the same value, about 120 ringgit, right? 120 ringgit. And normally I will pump only when the petrol indicator lights up. Okay. So no issue. 120 ringgit. I paid upfront 120 with the app. Then I went to pump. But the pump actually stopped, I think, at about $116. It stopped. I mean, normally when it stops means that the thing is full, right? Then I thought, hey, it stopped already. The petrol price, I think it came down. I never really look at the petrol price one. So I think that then I said maybe the petrol price came down because the crude oil prices also came down a lot. Maybe Malaysian also reduced the prices. Okay, so that's why I did not get the full $120 which I paid. Okay, so then I went back to work, and then I went online. I checked the fuel price, right? I checked the fuel price. Hey, no change. What? It's still 202. I pumped the not the normal petrol, the yellow color one. So it's not changed. What? 202. What? There's no decline in price. What? I thought to myself, hey, the petrol price already came down by more than 50%, right? More than 50%. The crude petrol, right? All right, came down by more than 50%. Yet I'm actually still paying the same. Okay, and then I should continue to actually get my petrol subsidy, right? This time I want to actually find another trade. And of course, since we already did the XOM earlier, which probably I will exit maybe in the next few days. I haven't exited the position yet. Expiry was actually 10th of March. Yeah, so maybe greedy a little bit, which sometimes does not end good, right? If you're greedy, but doesn't matter. So get a few more bucks from that. Maybe I will exit at 70% for that trade, and then I will actually enter into this XOP trade to continue paying for my subsidy. I mean, for that trade itself, I mean, it would have probably covered 100% of my petrol for February already. Yeah, yeah. So now I'm going to get my March plan for my March petrol subsidy. Okay. So XOM. Okay, let's look at XOM. Okay. Let me just open my trade platform first. Okay, so XOM is actually currently trading at 110. Okay, nowadays how to say, even XOM or the all these oil and gas companies, right? They are the price movement is actually quite big one. I think, like, if you see last week, XLE was actually moving $2, down $2, up $2 or $1. So the movement is actually quite big. Yeah, but of course they tend to be choppy. When they come down $2, then of course in the next 1 or 2 days, basically they recover. Yeah, because it's cheap, right? So people would actually buy them up. Yeah, same as XOM. Yeah, XOM, you can see the movements here is actually also quite big. Okay, let's see XOP, right? Okay, XOP is actually an ETF. It's actually a ETF. Yeah, XOP is actually an ETF for the Explorer. So who are these Gas Explorer? I mean, like Oxy, XOM. These are the companies. Conoco, I think is also in XOM. Let's check XOP. You can actually see their holdings. Yeah, what do they hold? Yeah, basically ETF hold other stocks related to the sector which they set this ETF for, and this is actually all companies, right? That means the Explorer companies, right? You can see the biggest holding is in this Callon Petroleum, which I don't know them. SM Energy, Occidental Petroleum, Oxy, the one which we saw just now. This Oxy, Berkshire Hathaway had or had interest in this, right? Diamondback, and then this one I don't know them. ConocoPhillips, yeah, of course, another big one. And then Exxon, and of course Marathon Oil. Yeah, so these are all the big boys in the oil and gas. Okay. Okay, so XOP is here, right? Okay, so basically, like I said, the because of the oil price and all, right, the uptrend for this, they are actually moving a bit. How to say, they are still going up, but tend to reduce the level of the trend, right? You see earlier the uptrend was actually quite sharp here, right? Then basically they had had a big retracement, and then they were actually bouncing up and down here. Like you can see that there's still the upwards support trend line. Yeah, this trend line is still going up, and of course they still find some form of support. support on this trend line since this 1 year trend line. I draw only 1 year, probably it's longer, all the way down to October 20, right? Yeah. So it has been finding support here. Of course, last week it reached below, but of course it quickly, swiftly went back up. I don't think oil price would actually go back to $50. Yeah. Although recession or whatever you talk about is coming up, and I don't think $50 will come. I mean, if $50, a lot of these companies will start to make losses, yeah, or not make so much money. Okay. As long as it's 70 above, I think for these companies, they still make. I'm not sure. I think there is actually a break-even price for them to make money, but I forgot which price. But definitely at 70 over dollars, they are profitable. Yeah. Okay, so so this is actually the trend. Then of course, with this support line, right? Then of course, anything coming below, there is actually one support here. Then of course, the other one we can actually find is this level here. Yeah, this level here, which is at around 115. Yeah, current price is 134. This is 115. A bit far lah. That means if it actually comes down and break, right, it don't have any more support. It can actually come down quite fast. So this is again one of the so-called risks we would have on this trade, because we could not find any support after it comes lower. Yeah. So of course this was one which basically it did find at this 126. So this is one, this is two. So if it breach below 126, then of course the next level down will be very, very far. Okay, so there's some risk on the downside. Of course, on the upside, right? Where do we actually find resistance? Yeah, would actually be here, this level one, which is at about 141. Yeah, one level 1141. And then another level, of course, here is at 148. Yeah. So how we actually draw all these things, resistance and support, right? I mean, basically, it is not too difficult. Basically, how we just pick it out, right? Is we look at the highest and lowest points. Yeah. We just look at the highest and lowest points of the price action. Okay. And what is the highest and lowest point of the price action before this lah? That means the highest and lowest point before the current price. Yeah, before the current price. And basically, where is the current price? This is actually the current price, right? So where is the highest point before and after? On the upper side, on the lower side, is actually this point, right? Is this point. So you can see this is actually the higher. Yeah, the higher 1 point. We take the highest point of the candles, which we can see towards the left. Yeah, and this lowest point towards the left is again on this mark here, down here. Yeah, this is actually the lowest point towards the left of the current price. So that's where we pick out possible support, possible resistance. And of course, if this price above is actually breached, then where is the next one coming? The next one coming is of course on top here. Yeah, on top here. And of course, if so-called this is breached, where is the next one? The next one would actually be slightly lower, down here. Yeah, so that's how we actually look based on the price, the stock price, where is the support and resistance level, possible support and resistance level. And of course, the other ones which we actually look at are the so-called trend lines, like this trend lines. This is another trend line which we actually draw, and of course we draw what we call the line of best fit. Yeah? You don't need to actually use any so-called ruler or what to actually measure. We just basically draw or whack. I mean, with some form of reasonableness. Okay, forget about it. Nesla, yeah. So this is actually how we actually draw it. I start from here, then I draw it up towards here, and of course, when I actually move up, right, I would actually want to touch as many points of the price of the stock as possible. Yeah, touch it. Yeah, touch it, touch it, touch it, touch as many points as possible. So that's the trend lines. Yeah. Okay, so a bit of technical analysis, revision, yeah, revision for you guys. Okay, so yeah, so with this, when we actually look at it, we have actually already looked at the so-called possible support, possible resistance. Then we actually look at the what is that? The trade, what we actually want to do, and then we go to the what is that? We go to the options chain to actually see whether we can actually structure out a trade. Yeah. Then yeah. So remember 128 144. Yeah, 128 144. Remember 128 144. The next so-called support and resistance. Okay. Then we actually move on to the what is that? To the platform. Let me share. Okay, so this is the platform. Is it up? Is it up? Yep. Okay. XOP. Okay. Trust SDPR series Trust S&P oil and gas. Okay. So this is okay. Look at the so-called data that we always check when we actually go into a trade, right? We actually check liquidity, 3 star. Okay, check good. IV of 39%. Okay, not too bad, 39%. And then we look at XOP, no earnings one. ETF, no no earnings. The yeah, got earnings here. No earnings. Yeah, no earnings. ETF got earnings one, no earnings one. Yeah. Okay, ETF no earning one. So that's why it's okay for you to trade on ETF. You don't need to actually worry about earning gap up, gap down. Yeah. Okay, then of course you look at the IV rank. Okay, IV rank 17.1%. I would say how to say not I would tend to actually do 2025 IV rank, but of course how to say 17.1 is okay lah. I mean, compared to before, it is only single digit. Yeah, it's only single digit, and of course if I compensate back with the IV here, right, 39 to 40%, it is still okay. Yeah. But anyway, as a second check, I will actually look at the when I actually do the trade, right, I will actually also see if I can actually get the premium which I actually want. Yeah, of course, if the premium and the risk to reward ratio does not work out, then probably it is also caused by the low IV rank and the small premium which you actually get out of this stock, yeah, or ETF. Okay, so options chain, we are now 17 March, the next month expiry, 17 days we can't do. Yeah, minimum I would actually take for such kind of iron condor is 30 days. Yeah, 30 days, 45 days being the optimum, 30 days being the minimum. Yeah, for iron condors. Okay, so let's say 45 days, there's no 45 days, and the next month expiry April is actually 52 days, which is 7 days above 45. I think it's okay. Extra. Okay. And then if you look at the options chain here, then I would just pick out straight on towards 20 delta, on the put side and 20 delta on the call side, as the so-called first price check. Yeah, first price check. Okay, so 20 delta 121. And for this trade, okay, maybe I don't do $5 with $5 with might be too pricey, or the cost of the trade might be too high for a lot of people. then maybe we do a smaller size. We do a $3 wide, $3 wide trade and see what kind of premium we can get. Okay, so this is before market opens. Yeah, of course, when market opens, the price might be different. So you still need to actually check whether the risk and reward which you are actually getting when you actually do a $3 wide makes sense. So for this on the put side, $3 wide, 58 cents. 58 cents, I think it's okay. I think it's okay, 58 cents. And then on the call side, 20 delta, you actually move to here 152. This is delta, yeah, delta here, delta. I just look at why I choose 20 delta. 20 delta is more or less around one standard deviation. Around one standard deviation means that basically from now until 52 days, we work out that the one standard deviation move is actually roughly at 20 delta as the so-called offhand feel lah. Yeah, I mean most of the time it's around there lah. So that means what it says is that with 20 delta you have 80% probability that the price won't hit 152. Yeah, 152. Okay, so it's actually quite a high probability trade on the put side and the call side, yeah, because each you're actually doing at 20 delta. So again, $3 with 152, 155. Okay, so basically for this we actually getting 105. I think this is pre-market. Maybe the premium is actually higher. When the market opens, check back the premium again. Okay, assuming you get $1 or 105 for this. So what is the risk of the trade? Risk of the trade is actually 195. Yeah, how you get 195 is basically the width of the trade is $3. $3 less what is the premium which you are getting for the full trade, which is 105. Just now 58 cents there. And then of course on the call side you are probably getting slightly lower, 48 cents. Yeah, 48 cents on the call side. On the put side you are actually getting 58 cents. So 300 minus 105, then of course your max loss is 200. Okay, 200. Okay, sometimes when we are actually doing a trade with different width, the risk to reward ratio can actually improve significantly. For example, if I'm actually doing this trade, right, what I'm risking is I'm risking $200 for $100 of return. Yeah, so basically 200 for 100. This is my risk. But if I actually move this up to $5 with, right, $5 with, let's see what risk reward I'm actually getting. I'm getting $164 for $336. Yeah, so what does that work out to? It's also similar, right? Because 164 times 2 is 330, right? 330. It also works out to around the same, but sometimes it is actually less. It's actually less. Yeah, so you got to actually watch that. But of course, the smaller the width, the more friction between each of them. Yeah, the more friction between each of them, and sometimes you may need to actually keep the trade longer to actually get more profits out of the trade. Yeah, but anyway, it's okay. We can actually do this at 105. It's fine. We just I bump it up to 2 lots. Yeah, 2 lots for myself. Maybe one would actually suffice. Yeah, because if I bump it up to 2, then of course the max loss goes to about 390 for this. Yeah, I got many cars to support at home. Yeah, so I actually need to take actually two lots because I have many cars to support at home. If you have only one car, then don't do two. Yeah, don't do two. Okay, so we have actually put on the trade. Then of course, if it gets filled later, then I will actually post on the chat and let you know if the trade gets filled. Yeah, if it can't, then I will also let you know when I am able to actually do the trade. Yeah. All right, so that's my March petrol subsidy trade. If it works out well, then of course I would how to get I would say I'll continue to actually get free petrol. Yeah. Wani, you actually want to ask about Wani, long time I never see you. Okay, you CVX. What is CVX? Chevron, is it CVX? Okay, let me see CVX. CVX. I only trade petrol stocks. But sorry, I only trade oil and gas stock. I don't buy oil and gas stock for investment. Okay, I don't buy oil and gas stock for investment. Okay, CVX, Chevron. Yep. Okay. Okay, Chevron. Okay, let's see this. Okay, if you look at the chart pattern, it's actually CVX. It's actually similar. The overall pattern, the overall pattern is actually similar to I think in most as most oil and gas stock. You can see. Let me just put it here. Let's put XOM. Yeah. One day, right? One day. Okay. This is since when? December 21, September 21, December 21. Okay. So these two stock chart, right? If you look at these two stock chart, you see the patterns are actually similar. It came to June, right? June, May, June, somewhere in June, it came down, right? Then after that, it actually starts to be a bit choppy. Okay. But if you look at let's say XOM against this XOM against CVX, I think the price for CVX actually CVX actually fluctuates a bit more, fluctuates a bit more. Yeah. And possibly because it has actually gone up quite fast, quite fast during this time. That means a lot. I think it is actually a much more popular stocks. CVX. A lot of people actually chase this during this time, right? Then of course, when it actually came down, it hurts a bit more because you see this 180 to 140. It actually came down $40 here. You see, yeah, $40 here, $40, which is basically about 25% only during this time. Whereas this one here came down about $15, about 50. Sorry, here about 81 to 105, about 25 dollars, $25. Yeah, also about 20 over percent. Yeah, but this one, the quantum wise is actually bigger. Percentage wise is more or less the same. Yeah. Okay. So yeah, you see the trend. There is also a so-called support line, right, on here, right? Yeah. And it's actually bouncing off. Yeah, but of course this one is even worse because it has actually gone down below 200 moving average. Yeah. So compared to XOM and CVX, I think XOM, the support is actually much better than CVX. Yeah, it is still actually trading above 200 moving average. This is daily, right? Daily. Yeah, daily, same pattern. Yeah, it's still trading above daily, whereas CVX has actually gone below 200 moving average. Yeah, so once it actually go down below 200 moving average, right? Then basically it's actually looking for another level of support, possibly, I don't know, 250 moving average or something down here. Yeah, you actually got to see what level of so-called support it actually is holding this level. Yeah, maybe it's no longer 200, it is maybe 250 or 300. I'm not sure. You got to actually check here. Yeah, so you can also change this if you just want to do a quick check, right? you can actually check this, let's say 250, right? You can just check this 250. Yeah, it's also not 250, you see. You see, this is 250, this is 250, then this is actually already below 250. Yeah, so it is a bit more how to say not 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 fixed lah, not so fixed, not so certain where is the real so-called moving average support line. But the trend line that is still there, yeah, but not holding on any moving average. You see, this is still 200, right? You can see this 200, this 200 here, this 200 here, yeah. Two on the lower side is still hitting here, but not this. Okay, so that's CVX. Okay, so I'm not sure if that is what you actually wanted to ask me, yeah, about CVX, but I think probably possibly you actually look asking for how the trend is actually working out on CVX. I hope I answered you, Wani. Okay, all right, great. Okay, so yeah, so this S&P now I think it's actually back up about 54 points for the Nasdaq, right? Nasdaq futures. The S&P mini futures is also up 14. It's also up 14. I think because yesterday itself they had actually a green day and they found support, right? I think for the next few days possibly would actually be some green days for the week, because we have how to say, ended the February bad month, right? So hopefully for March, right, we would actually start off with better footing to have more green days ahead, right until 14th of March. Yeah, 14th of March. That means basically another 2 more weeks. Yeah, another 2 more weeks before the CPI comes. Yeah, so of course sometimes before the news comes, right, they want to buffer up the market for the decline. Yeah, so it can happen that the market actually rallies up, right, then bad news comes, it comes back to the 4,000 level. That is also possible. Yeah. Okay, so I mean, these are just for entertainment, just some hypothesis lah. I mean, some hypothesis. Sometimes, if you're actually trading, right? Sometimes if you don't have your own hypothesis, it can also be quite boring, right? Like these few days, it has actually been quite boring. Market has been actually quite slow lah. I mean, yeah, the not the very action packed day, right, where you can actually move up and down very fast. So most of the past few days, that the tick movements has actually been quite slow. Yeah. All right. So have a safe trading week, and of course, hopefully we can actually make more money through this oil and gas stocks to cover my petrol subsidy. Yeah, hope that it had actually helped you guys too. If you had actually entered into the trade, do let me know if it has actually worked out well for you guys also. Yeah. All right, so until next week, bye bye.